Hello everyone. In this video we will continue discussing about accounting equation problems. This is our problem and here I have taken 10 transactions. Apart from this problem we are going to solve 4 more problems and these problems I have picked from T.S. Graval textbook. Hope these 2 videos will make you solve any type of accounting equation problem. Now let's see our first transaction. Tim started a business with cash 1 lakh and opened a bank account and transferred 2 lakh from his savings account. So Tim started business with a capital of 3 lakh. That is cash 1 lakh and bank balance is 2 lakh. Here we have 2 asset accounts. One is cash, another one is bank. Under asset side of the equation we write these 2 accounts, that is cash and bank. Under cash we mention 1 lakh, under bank we mention 2 lakh. And for capital it is 3 lakh. Asset side total is 3 lakh and liability side total is 3 lakh. These total columns I have included only for explanation purpose. If we notice in this transaction we only have cash and bank balance as opening balance. In case if the question states Tim has started business with a cash 50,000, bank 1 lakh, goods 60,000, machinery 1 lakh and furniture 50,000, then the capital would be 3,60,000. Let's see our next transaction. Purchased a building from Sohan for 5 lakh, paid by taking a loan from SBI 4 lakh. Here we are purchasing a building by taking a loan of 4 lakh. So total loan amount is 4 lakh and the building value is 5 lakh. So for the remaining 1 lakh, I am assuming that the business is paying that 1 lakh from the available bank balance. First we will create a new column for buildings under asset side and mention the building value, that is 5 lakh. Under liability side we create a new column for bank loan and mention the bank loan amount, that is 4 lakh. Finally, we will deduct 1 lakh from bank balance because I am assuming that the remaining 1 lakh amount I am paying from the available bank balance. Now cash is 1 lakh, bank is 1 lakh, building is 5 lakh and asset side total is 7 lakh. And liability side total is also 7 lakh because bank loan amount is 4 lakh and capital is 3 lakh. Asset side total and liability side total is matching with each other. Next transaction is paid interest on loan 2,000 and installment of 50,000. Here paying interest for loan is considered as an expense and paying installment amount is not considered as an expense. So first we will deduct the interest and installment amount from the available bank balance, that is 1 lakh minus 52,000. Then we will deduct the installment amount from the bank loan because we have already repaid 50,000. So we are deducting that 50,000 from bank loan amount. That is 4 lakh minus 50,000. Finally, we will deduct interest, that is 2,000 from capital because paying interest is an expense and we know that expense decreases capital. After deducting the amounts, the cash is 1 lakh, bank is 48,000, building is 5 lakh and the total assets is 6 lakh 48,000 and liabilities total is 6 lakh 48,000. And bank loan amount is 3 lakh 50,000 and capital is 2 lakh 98,000. Assets total is 6 lakh 48,000 and liabilities total is also 6 lakh 48,000. Next transaction is purchased goods for cash 30,000. Here the business is using the available cash to purchase the goods. So first we will deduct 30,000 from cash and we will create a new column for stock under asset side because stock is also an asset. And we will mention 30,000 under stock. After deducting 30,000 from cash balance, the cash value is 70,000 and stock value is 30,000. The remaining balances will remain same. There won't be any change in the other account balances. Assets total is 6,48,000 and liabilities total is 6,48,000. Both sides totals are matching with each other. Next transaction is sold goods to Joe for 10,000 and received a bills receivable for the same amount for 2 months. In the question, they have not given cost of goods. They have just given total amount of sales. So we don't have to add profit to capital. We just have to deduct sales value from the stock value, that is 30,000 minus 10,000. And also we will create a new column for bills receivable under assets side because bills receivables are assets. And we will mention 10,000 under bills receivable. After deducting 10,000 from stock value, the stock value is 20,000 and bills receivable is 10,000. The remaining balances, that is cash, bank, building, bank loan and capital, will remain same. There won't be any change in these account balances. Assets total is 6,48,000 and liabilities total is 6,48,000. Both the totals are matching with each other. Next transaction is received 10,000 from Joe against the bills receivable on its maturity. Since the business has received the amount from the customer, that is Joe, we will add 10,000 to cash. And also we will deduct this 10,000 from bills receivable because business has already received the money from customer. So the bills receivable is no longer valid. After adding 10,000 to cash, the cash value is 80,000 and bills receivable value is 0. Bank, building, stock, bank loan, capital balances will remain same. There won't be any change in these account balances. Asset side total is 6,48,000 and liability side total is 6,48,000. Both the sides totals are matching with each other. Next transaction is half of the leftover stock sold at a profit of 10% on cost and half of the payment is received in cash. The leftover stock or the stock value at this point of time is 20,000. Half of 20,000 is 10,000. So the business has sold 10,000 worth of goods for 10% profit. 10% on 10,000 comes to 1,000. So the total sales value is 11,000. The question states half of the payment is received in cash. That means half of 11,000 is 5,500 we have received in cash. And the remaining 5,500 we will mention it under debtors. First we will add 5,500 to cash because we have received 5,500 by cash. Then we will deduct 10,000 from stock because we have sold 10,000 worth of goods. Now we will create a new column under asset side because debtors are assets and we will mention 5,500 under debtors. Finally, we will add 1,000 to capital because 1,000 is our profit. After adding 5,500 to cash, the cash value is 85,500 and stock value is 10,000. Debtors value is 5,500 and capital value is 2,99,000 and the remaining account balances, that is bank, bills receivable, bank loan, remains same. Assets total is 6,49,000 and liabilities total is 6,49,000. Both the totals are matching with each other. In this problem, they have given half of the stock. In some questions, they have given 1/3 of stock. In that case, we just have to multiply stock value into 1/3. Next transaction is invested in shares 10,000. In brackets, they have given personal. That means the proprietor has invested in shares for his personal purpose, not for business purpose. So business consider this as an expense. It will not consider it as an asset. In this case, we will deduct 10,000 from cash because business is treating this as an expense. And also we will deduct 10,000 from capital. We have already discussed in the last video that expenses decrease the capital and incomes increase the capital. So we are deducting this expense, that is 10,000, from capital. After deducting 10,000 from cash, the cash value is 75,500 and the capital value is 2,89,500. The remaining account balances, that is bank, building, stock, bills receivable, debtors, bank loan, remains same. If we notice, in this transaction they have given personal in brackets. If personal is not mentioned in the question, then business will consider it as an asset. In that case, we will create a new column under asset for investments and we will mention 10,000 under investments, and also we will deduct that 10,000 from cash balance. Next transaction is goods destroyed by fire 3,000. This is a loss for business. So we will deduct 3,000 worth of goods from stock value and also we will deduct 3,000 from capital. We should always remember expenses and losses decrease as capital. Incomes and gains will increase capital. After deducting 3,000 from stock, the stock value is 7,000 and capital value is 2,86,000. The remaining balances will remain same. Asset side total is 6,36,000 and liability side total is 6,36,000. Next transaction is receive the security deposit from tenants 5,000. Security deposit is a liability for business because when the tenant is vacating the place, the business has to pay back the security deposit to tenant. So security deposit is considered as a liability. Since the business has received the money, we will add the security deposit to cash. And also we will create a separate column for security deposit under liabilities side and we will mention 5,000 under it. After adding 5,000 to cash, the cash value is 80,500 and security deposit value is 5,000. The remaining balances will remain same. Assets total is 6,41,000. Liabilities side total is 6,41,000. Both the totals are matching with each other. Before going to the next problem, we will see a couple of formulas which will help us to solve different type of accounting equation problems. Our first problem is, if the capital of the business is 3 lakh and liabilities are 50,000, loss is 70,000, calculate the total assets of the business. In the question they have given capital, liabilities and loss value. The equation is assets is equal to liabilities plus capital. Capital and liabilities are already given in the problem. So they are just asking us to find out assets. We have already discussed that losses and expenses decreases the capital. So we have to deduct the loss that is given in the question from the capital. In the problem they have given loss amount as 70,000 and capital is 3 lakh. First we will mention liabilities amount, that is 50,000 under liabilities. Then we will deduct 70,000 from 3 lakh which comes to 2,30,000. As per the equation we will add capital and liabilities. After adding the value is 2,80,000. So assets is 2,80,000. Our next problem is, if total assets of the business are 1,30,000 and net worth is 80,000, calculate the creditors. In this question they have given total assets, that is 1,30,000 and net worth, which is nothing but capital. Capital is 80,000. They are asking us to find out the liabilities. Creditors are nothing but suppliers who has sold goods to the business on credit basis, not on cash basis. So business is liable to pay the money back to the suppliers. So creditors are considered as liabilities. The equation is liabilities equal to assets minus capital. Assets is 1,30,000. Capital is 80,000. 1,30,000 minus 80,000 comes to 50,000. So 50,000 is our liabilities. Next problem is, A commenced his cloth business on 1st April 2018 with a capital of 30,000. On 31st March 2019, his assets were worth 50,000 and liabilities were 10,000. Find out his closing capital and profits earned during the year. In the question, they have given the opening capital, that is 30,000. They are asking us to find out closing capital and profits. The formula to find out closing capital is closing assets minus closing liabilities. In the problem, they have given assets and liabilities balances as on 31st March 2019. That means these are closing balances. So to find out closing capital, we will deduct liabilities from assets. That is 50,000 minus 10,000, which comes to 40,000. So closing capital is 40,000. To find out profit, the formula is closing capital plus expenses minus additional capital minus opening capital. If we notice in the formula, we are adding expenses and subtracting additional capital. Usually we will deduct expenses and losses and add additional capital to capital. But here we are doing in a reverse manner, because in the question they are asking us to find out profit. So we are adding and subtracting the amounts in reverse way. In the question they have not given expenses and additional capital. So to find out profit, we need to deduct opening capital from closing capital. Profit is equal to closing capital minus opening capital. That is 40,000 minus 30,000, which comes to 10,000. So 10,000 is profit. Next problem is, on 31st March 2019, the total assets and external liabilities were 2 lakh and 6,000 respectively. During the year, the proprietor had introduced capital of 20,000 and withdrawn 12,000 for personal use. He made a profit of 20,000 during the year. Calculate the capital as on 1st April 2018. In the question, they have given closing assets and closing liabilities, that is 2 lakh and 6,000. In the question, they have given assets and liabilities balances as on 31st March 2019. So these balances are closing balances, and additional capital, expenses and profit are also given in the problem. They are asking us to find opening capital. The formula to calculate opening capital is closing capital plus expenses minus additional capital minus profit. Closing capital is equal to closing assets minus closing liabilities. Closing assets are 2 lakh minus closing liabilities, that is 6,000, which comes to 1,94,000. This is our closing capital. Now let's substitute the values in the formula. We get 1,66,000 as opening capital. This is the note that I have prepared for your reference. If you want, you can read this or you can ignore it. If you have any questions related to these problems or related to the note that I have prepared, please do not hesitate to post them in the comment section below. And also, if you like the explanation, do not forget to click on the subscribe button. Thanks a lot for watching this video.